Good afternoon. Welcome to OptionsTender. It's our weekend edition. We're going to check out the big phrase here, whether we're looking for a lower high or a higher high. I will go through and explain what I'm talking about. We'll touch on the Apple tariffs. We go into a deep dive on the membership video of what we think Apple is capable of doing next week, and whether or not, and this all ties in together, whether we talk about extensions. I've been going along with the Discord and members and just kind of teaching this extension phrase of, I guess it has to do with Elliott wave more than anything else, but we'll go into that, and that will go into the example of whether we're going to touch a new high or not. I think both scenarios are pretty equal at this point, but we're still looking for a lower high as our primary. Okay, but you got to be ready for both. So that's why we used Apple as a hedge to the upside. And also, I just want to talk about market breadth. We know that we're going to check out the McClellan summation at the end there, and then we'll go into the breadth videos of part 1 and part 2 that I have available, and I'll post them at the top of your screen going on a little bit later. All right, and then our options expected move for the week is 122 points. All right, the volatility is still elevated. The market, I remember a time when the options expected moves were, and I honestly do remember when they were a lot lower in the 20s, but regularly in the 40s and 50s. We're in a good trading area here, so we're looking for a reversal in trend coming up soon, whether we make a higher high or a lower high. All right, so we'll check out the options expected move, and then we're still looking at this positive structure, right? That's why all the buyers came in. Even if we make a lower high, this still is a positive configuration until we actually break the lows from the tariff crash. So let's jump into it, you guys. Let me close this up here. We're going to start off with SPX. We're going to go around the indices, and we're going to check out some indicators on SPY and SPX as well. So we're going to do the monthly and the weekly, and we'll go from there. So I love starting off with this SPX on the monthly time frame. We have 1929, 2000, and that's where we made contact and reversed off of to make the crash from the tariffs. That's a historic high there. Will we re-tag that high? That's part of the question. We also have 2008, 2022, and 2025 again, where there's confluence, where we had a reversal. Okay, so looking a little bit deeper, so far we have a lower high, that now just above, let's call it about 6,200, depending on where price is. It's an ascending channel here and trend line. So just above is about 6,200. That would be your higher high, and tagging again at the historic trend lines. Back in 2000, we had a high, and although there's 150 or so days of consolidation, we made a lower high. All right. But in 2008, we made a high, came down pretty darn quick, tagged that 20, and then made a higher high before the crash actually started happening. All right. And that was right along that trend, and that's also the trend line that's here. So which scenario happens? I don't have that answer for you, but what I do have is something to look at into next week. If we start getting this sort of price action, then we could probably see that new high. So I may go down all the way to the 65 so I can reiterate. Even though we did it yesterday, it's very important to look for the game plan this week. All right, so looking at some items here, much closer. We're above the 8 EMA so far. We're in a positive configuration, we know structure-wise, and the momentum is curling back up, and we made this nice close above the 8 EMA. So, nothing but positive. And on this look here, right away, if I had nothing else to look at, then I think we're going to tag the highs here. All right. With this nice positive push up here, nice hold of the 20 and the 8 EMA. The 8 EMA is our momentum indicator. The 20 is our trend indicator. Looking at the DMARC, it's going to take a long time to play out. I might not do that each and every time on the month. Yeah, because we get new people every time. So what we're doing is we're checking out this count here. 1, 2, 3 count to the downside so far. If we get a lower high, that count's going to continue, and we'll look for the play out down to the 9 count for an exhaustion. And I think that is likely the case. But again, from this point of view, it looks like we're going to go tag new highs. Now, from our options tender setup here, we have our MACD. Our MACD made a bearish crossover already. So if we do make this new high, then we're going to get a negative divergence in the monthly time frame on the MACD. That's huge. So I wouldn't hate it. I wouldn't hate for that to happen. It just delays our actual larger move to the downside, and that's okay. Also, we're in this positive to bullish territory. We're at about 60. So, I mean, clearly we had that nice push up. Is this going to roll over? We'll see. Not so strong, being in the red. That's actually strong. I know a lot of people use it as a reversal indicator, but so price isn't really moving that quick on the monthly time frame. But again, if we do make that new high, we'll make this bigger negative divergence here in the RSI. And we're starting to curl. Let's see if we get a curl up on the slow stochastic. My guess is that if we do, we start to curl back down, even with that lower high or higher high situation. I think we'll get that either another negative divergence or a rollover to continue to the downside. Let's move over to SPY. Okay, looking at SPY, it's really the same thing, same look here, less information from the back. We have that target right up top there if we choose to do so. Really, we only want to look over here for the volume profile, and we have this node coming up down here. If and when we do reverse, and then we'll keep an eye on the next one after that between the gaps. So let's go to the cues. We'll go around the horn. Same thing. So we have that pivot that worked really well. Maybe we tag the top of that pivot, and also keep an eye out whether the cues can make a new high, and maybe SPX does not, or SPY. Let me put on the moving averages too. So on SMH, I doubt that SMH is going to push much higher. We talked about this last week. We had the NVIDIA earnings that happened. And my thesis, I'm not going to go through the full analysis, but my thesis is that NVIDIA and Tesla are already cracking. They already have sell signals. And I do believe that they're going to reverse. And so I'm looking at something that has potential to move to the upside as a hedge. And I think with the tariffs looming, we've had a threat of a 25% tariff on Apple. If that gets pushed away or taken off the table, whatever the case is, I think Apple has a huge pop and then drop. Okay. So in words, that's what I think is happening. And I think SMH is at its resistance. I don't believe it's going to get above here. I do think this is going to reverse. So if this starts to reverse, it's going to lead us to the downside. Now, it doesn't have to do that right away. It could take some time and for everything else to reverse behind it. But if I had to bank on this one, on this indicator alone, we're at resistance. I think that starting next month, we're probably going to get a reversal, and then we'll get some continuation to the downside right here and right now. So do we make those new highs? The evidence is back and forth between those. And it's if we do make new higher highs on SPY and SPX, then I think it's going to be brief, and I think we'll get a pretty hard reversal after that. DIA. Again, this is a pivot, so price is actually wrapping around here. Let me make this into a dash line. It hasn't been playing out very important. We closed above it on the monthly time frame, but price has kind of touched it and made reactions off it. But we're going to pay more attention to that 8 EMA and resistance. You had this distribution up top here, and it's pretty much just like SMH, where you had this price action. We're at the bottom of the box. It could, you could make it to the middle there and have a price node, a volume node there as well, if it did want to push a little bit higher. But it's having trouble with that 8 EMA, and it's in resistance, so it could roll over from here. Again, this is neutral to down at this point because it's struggling. And then IWM struggling even more. Price made it up to this this volume node, I'll call right here. We had the classic trading pattern around it, where we traded above, below, and then got on top of it and held on top of it, sideways to up, right? So we came back into that zone, working against the 20, the 8. Probably the weakest index is right here on IWM. So if IWM starts rolling over, again, there's signs of cracks in the market. Does it go a little bit higher and just need to get to that next target in SPY and SPX? Well, probably not going to get much help from IWM. The VIX. So the VIX is in this nice cycle here. It's this rising phase, and I do believe that the VIX is eventually going to break out. Back testing so far, a little bit negative. Do we get the reversal a little bit lower? Are we going to make a new low? No. I highly doubt that. For many reasons, we continue to go through the VIX index, and we're at a really good support area. Do we peak below it on the weekly time frame or the monthly time frame and make a wick to the upside? That's fine. But right now, just coming into consolidation areas, you see the basing here. We're at that basing as a back test so far, and I do think this continues higher coming up pretty soon here in the next week or two. So if we go back to SPY, let's go back to SPX because I want to get two different points of view. We might even go to ES if I can remember. All right, the weekly time frame. Here's our point of view from SPX. We're above that first of all, we're in a consolidation area. We're above that that support resistance. We're holding on to that as of this week, but we have an inside week. Is this a reversal? Inside reversal? We can see what happens next week. If we start to break above these points, then I think we're going to all-time highs. If we break below, so this is going to be a very important consolidation area. Is it distribution, or is it a consolidation for higher prices? If you had to look at the moving averages, they're getting really tight, and price action is going to start moving quick. So if we break below, I think the move will start accelerating, but this could start to pan out to the upside, and we'll creep up here and then have a rollover at that point. So I know that I'm not giving you a whole, my primary scenario is that we fail. But how can I deny the fact that we're above all of the moving averages? All right. So those are the moving averages. We have our DMARC. We have a 5 count. Does this go all the way up to a 9 count? Get an exhaustion, reverse. All right, so we had that bullish crossover on the MACD. We're right into a neutral zone here. So this would be the perfect spot, in my opinion, for a rollover to continue to the downside to lower lows on the MACD. We already made it into overbought territory. And if any movement higher here, we're going to get a little bit more overbought. I doubt we're going to see any divergence there. Not a whole lot happening. If we make new highs and go up there, we'll probably just get to higher highs here in the RSI. But getting to the overbought's pretty strong on the weekly. Can't deny that. Starting to get a crossover in the slow stoke. If we do get the sell signal here at the 80 and crossover here, that's probably going to signal that we've already moved down below the lows of this consolidation area. So 3 weeks in a row, price action's getting really tight here. Let's see what happens. All right. No need to go to SP. Well, I guess we can look at that volume profile. So look from the weekly volume profile here. So we're starting to, we have a lot of volume nodes happening. Prices, a lot of trading going on here. If we start to break down, notice we have that node right here. Close the gap. Maybe that's where we hold and then go higher from there. Even if we break down from this consolidation, as long as the support that we've been talking about last week and just about every daily video holds, now that will be a bad sign to break down from the consolidation, but price has to hold and break the that volume node as well, and then after that it could easily come down to 520 to test out that area if it gets into that gap. Okay, so like I said, price could accelerate down lower, and that would be the next spot, about 520. If we close the gap, the gaps here, there's a couple of gaps, but there's a weekly gap, and I think that should close first before going higher, but there's nothing that says price action can't stay much higher from here. You see what I mean? So 8 EMA continues to go up. There's no denying that. But again, if this comes down, closes the gap, you'll probably see a reaction off of it. And so if that happens, we're going to be watching desperately, because our most important moving average, in my opinion, on the large view of things, is this 20 moving average. So if we get down to close the gap, that's going to be scary, right? That's going to be getting back underneath that 20. If we see it regain that 20 after that, that's got to be bullish. That you have to be thinking that we're going to make those new highs. Let me see if there's anything on the Elliott look here. Okay, so there's time and price coming in on the 21st, but nothing really. We haven't looked at this often because our first node here would be the 21st. If we start to get a lower high, then I can add on more, but there's nothing to really see here. Let's go to the Qs. We'll zoom through these. All right, bearish rising wedge, back testing right now. That's all that's showing to me. We have this consolidation area. We're starting to get somewhat of a reversal pattern here. We peaked above, made a new high. Let's see if we have any sort of divergence. We peaked above it, but we're back in that trading range, just like everything else, all right? So we could potentially roll over. We did, in fact, have a high here 2 weeks ago. We might have tagged just a little bit above there, but either way, we have a lower high in the RSI at this point. All right, we're at a 67. We're at about a 65 there. And then, 73 at the peak. And then we're at about a 67 right now. So we actually have a bearish divergence. It could play out to the upside, but this is a hint that maybe the move is done. So I would give that a check mark for the bears, that there's a divergence here and a potential reversal candle on top of that. All right, we certainly have the crossover here, an early sell signal, but our actual sell signal with momentum heading lower would have to be this 80. So we'll keep an eye on that for next week. SMH. Again, the bearish rising wedge broke down. We're just back testing. Once again, so much volume here. I wonder if you could see it from this point of view. Yeah, there's no denying the huge volume node. We're right into it. You don't even need to pull up this indicator to see it, all the trading there. And we're reversing off of it with potential reversal candles here. It's still considered a consolidation, but we have a double inside week. And if SMH has anything to do with it, again, Nvidia and Tesla have broken down from the bearish rising wedges on the daily. And so I think this is a really good sign that we could go lower. But if any individual names want to hold us up, I think it will be brief. And then I think there will be a reversal afterwards. All right, so here's a better look on the weekly time frame. This consolidation zone here from the past, we had a lot of trading. We created a support and resistance, and not resistance and support right over here. And now we're back at that resistance. So the bearish rising wedge, if again things want to get get a little bullish here on us, this is just the 50% retracement from high to low here. And so you could make it to the 62. That's why I said I'm not, nobody can tell you where it's going. They're guessing if they say it's going higher or lower from this point. You can have your thesis on things, and that's what we do. And so my analysis is telling us, look for these items. If they show strength next week, then get on that side, and I think it's going to go higher. I'm not going to turn around and get all bullish on you. I think the upside is limited, but I will protect my portfolio. IWM, DIA. I just kind of drew a channel here. So if we do reverse from this point, if we start to break down from this channel, I think it makes a very good valid trend line here. You have 1, 2, 3, 4 touches. And if we break down from here, that would be very bearish. But, we have good resistance and then support right at this zone. So I think we're at a good spot for reversal. I think the odds are against us to the upside, but I just wanted to explain what it would look like if we were to go higher. And here's that trend that we've been talking about. We had a whole bunch of basing here, and then we have this almost expanding. I put this trend line up here, just in case this is an expanding move. And we're at support. Maybe we go higher here to go touch the top of the wedge. Maybe this is an expansion. All right. Look at these higher lows, higher highs. Boom, boom. Very possible. We're in a rising phase. Right? No need to make new lows at this point on a rising phase. We'll see. SPX on the daily. On the daily time frame, we have this bearish rising wedge. At this point, I think we're just back testing the wedge, and we could see lower prices. But again, we're in an equilibrium at this point. You can draw a downtrend, you can draw an uptrend, and that gives us a triangle. I don't think it's an actual triangle where you have an A, B, C, D, E, and you go higher. I think it's potentially just an equilibrium, price on a low volume week, held up. All right. And then we get our follow through to the upside or downside next week. And you can just draw those lines in. If it breaks the downtrend, then we go higher. If it breaks the uptrend, then we go lower. All right. It is and can be as simple as that going into next week. Now, we're just going to look at this McClellan summation. In the summation, we're in the bullish territory, but we're starting to curl down. So is this the top? We'll have to figure out what happens after here. On this alone, this gives us a check mark for the bulls, right? Because the breadth, market breadth, and again, we have those videos for you to look at. They're free videos, tutorials. And the tutorial link is down low in the description, but I'll also tag those up top. You'll probably see them flash on the top of your screen. We are in bullish territory, so it gives a check mark to the bulls. But what's going to happen, and I know we mentioned this last week, is it got into this bullish territory. So what we're probably going to see is price corrects. If it does even go any lower, probably want to see this neutral area and then hold on to it for a higher low to get into extreme bullish territory. And that would take us up to new all-time highs at that point. Otherwise, we're just going to continue our trend lower. And all this was our first initial move here. It's almost like it's forming a wedge. You see how the price action happened here? Formed a wedge, broke out of the wedge. You know, it could continue. Maybe it's just a back test higher, or this is a new downtrend. All right, you can even draw a channel. And it goes lower into extreme bearish territory. If you look back, we did this before. Let me bring this time frame out just a little bit more. Yes, from 2022. So we had our all-time highs back here in 2021. And then we started to follow this. And look, we got back into bullish territory after being in the bearish territory. Not as extreme. And then was it a top? Yes, it ended up being a top. And we continued this channel to the downside. Is that the same case? Here's what we're going to do. We're going to draw this as that wedge for the bulls. And you get the back test and higher. But we're going to draw a channel here to keep a reminder of what could be happening, because it needs to prove itself. Look at that. It's a perfect channel. It doesn't get much better than that. Okay, so we'll see if this continues to channel lower. All right, I love these McClellan oscillator and the McClellan summation index. Use those. Put those in your tool bag. They are very, very good. This is for the longer term. The McClellan oscillators for the near term. Breadth. All right. So breadth part 1, the video, that has to do with the advanced declines that I use on the daily basis. But the part 2 is on the McClellan oscillator and the summation index. So although I like them both, part 2 I think would be the most important in an overall, especially for a swing trader. All right. So let me go over to, I'm going to go over to ES real quick. And this is a highly unusual situation for ES. All right, let me go to the futures. Here's a highly unusual situation. We have these large gaps. All right, we held it once. This is very unusual in the futures to have these gaps last even more than a week, and let alone multiple weeks on this bottom one. These are going to close. That doesn't answer our question. It's still, that's a check mark for the bears. We made a new high here, is a divergent high as well on indicators, but we're still making higher low at this point, higher highs and higher lows. So we can't deny that it could go higher. All right, the 59.14 is our probably our most important, the mid zone of this price action. So if we get on top of that and stay on top, you can see that price could go higher. But if we do make these new highs here, that's just a signal to me that things are going to reverse, and they're going to reverse probably pretty hard to close these gaps, both of them. All right, but we could reverse from this point and close them. So if you're going to be bullish, I would recommend having some put protection as price goes higher. If you're going to be bearish, I would recommend having some call hedges with some individual names that have potential. And that's not Tesla and it's not NVIDIA. I'll give you that hint right now. All right, last thing on SPX is our options expected move. And I draw these in. I've been drawing these in for years. I got that from Theo Trade, learned how to do that. And I have a video on that in the tutorials as well, the options expected move. It's just a constant reminder of, where price could go to expected by the options market. Not biased to each side, but if it does go higher this week, we could easily see that 60-30 area. Well, I can be exact, actually. If we go higher this week, we could see 60-34-34. We could tag that. Or if you have a bearish bias, it could reach that 57.8904. I will say we're in a unique area that price is consolidating. So at this point, it doesn't have to hit either side when it goes sideways. Okay. For example, price started off, you see this negative red candle right here. Price was going sideways. And so the week started off where the white line is. It tried to go up. It didn't reach the upper end. Didn't reach, it came back to the mid. Didn't reach the lower end. Oh, that's a bad example. Sorry. It actually gapped down to the lower end. So it's just a really good spot. I'm not going to waste your time looking at it. It didn't right here. Maybe it did. I don't know. So, but it does a really good job at keeping the probability of price reaching to each end. If you look at a bell curve, the probability, the one standard deviation is that it touches one or the other. All right, it's a less probable situation where it doesn't touch. So, yeah, obviously I can't find one right now. That's actually a good thing. Okay, so anything else? We covered all of this. Our primary is that we're in a wave 1 into a wave 2. Oh yeah, I want to go down to the 65 and show you one last thing, and that's the extensions. We're talking about extensions. So if we go to SPY on the 65, I have our example down here. Zigzag is the bearish situation. Now here's our extension. We could have, you have an A, B. Well, first of all, let me start down here. We have our A, B, C into an A. All right, that could have been the end. That could have been the end of our correction. But the correction extended out. We had a sideways correction into another ABC. And that at that point, price held. So we can make that a B. And then we're expecting a 5-wave move. All right. We got our 1, 2, 3, 4, 5 for a 1. We get a 2 running flat. 3 started getting smaller, a small 4, and a 5. So by alternation, we had this big correction. We had a little correction for wave 4 and a 5. Once again, this could have been it. All right. Now, along with your moving averages and other indicators, we had divergence there. That could have been your ABC. That was at the 62% retracement. That could have been it. All right. And so what we have to acknowledge at that point was momentum was to the upside, and it made a classic trading pattern. And it held on. So in other words, it traded above the 62% retracement. It traded below the 62% retracement. At the point where it got above, that was our first clue. It didn't give you much time to react to that first clue. That price was going to go higher because we're setting up another 1, 2, and honestly, that could have been it right there also, and you just don't know because that was your impulse wave that could have ended another move into a C with negative divergence, but an overall pattern, classic pattern, and held on top of the 62% retracement. And that's when you had the weekend. It gave you the gap up from tariff relief. And so if you weren't in it by then you know that's a tough one to get bullish on at that point. It didn't allow you to get in. And then if you're a very short-term trader, you can watch it just grind up, each candle just moving, just grinding, hardly making any movement. Now in the scheme of things, you can say, oh yeah, well that made 10 plus points higher. That's 100 points in the SPX. But that, I mean, I'm not going to swing trade that. That's not, but you can put on your hedges, I guess, at that point. So now that we made that extension, that became a 1. And this was a very, very shallow 2. All right. So that makes it very tough to trade. And now we have to count a 5-wave move again. 1, 2, 3, 4, and 5 for wave 3. But now that we have the extension, we know that it's going to go a little bit further, and you have your tiny little wave 4 and 5 in here again. All right, so this wave count is either done, or we have to change this to 1 into a 2. And here's where I relabeled it, last wave. That would be your 1, 2, 3, and we already made 4, or 4 could go a little bit deeper to the 382. I think it's more likely, if it's going to continue to push up in a bullish count, that it holds all of our moving averages, and it could whipsaw us out again. It would close the gap and we can go higher. That would be a secondary bullish. But what we want to look at going into next week in the short term, if we get above here, this is our first clue that the bearish scenario is done and that we're in another extension. We have a 5-wave move up here. That's not a real candle wick. 1, 2, 3, 4, and 5-wave move. Potentially, right? I know I can fit an A, B, C in there. But now this potentially is a 1. We got our 50, 60% retracement for a 2. And so if we see this new high, price is probably going to continue into a wave 3. And there's your extension from it, 611.73. And notice where the highs are coming in. Right about that extension. You'll probably see a reaction off the all-time highs at this point, and get a wave 4 and eke out a divergent high in the near term on the 65. Okay, or the 2-hour, whichever. I use the 2-hour for the members and 65 for the overall. And at that point, that's our bullish scenario. I think that's where everything comes to a halt at that point. And without getting too much further in it, now we have to remember, is this overall picture, sorry about that, is this overall picture just a wave 1? Or is it the 5 to end? Or are we going to get extension from a 1 into a larger correction to a 2, and then 3 goes on? I think that's the least likely situation because of evaluation, all that stuff we talked about last week. But we've seen things go crazy before, right? In the near term, we're looking for either a lower high, we continue lower from this point, or we make that higher high. We can't invalidate the bullish scenario until this 382 gets taken out, the gap, underneath the gap. All right. Thanks for watching. Don't forget to like and subscribe. We'll see you in the next video. Have a wonderful rest of the weekend.